All right, this is going to be a quick and dirty overview of how to integrate some macro analysis into your investing and trading decisions. So, we're going to talk about four things. We're going to talk about economic data. Really, we're just going to mention all this stuff: economic data, hot sectors, market leaders, and ETFs. So, these aren't things that you're going to necessarily consider every day, but they are things that you should consider once a week, once a month, whatever. Um, from economic data, you can consider that once a month, not that important. Hot sectors, once a week. Market leaders, once a week. You start tracking ETFs to gauge market sentiment. I do that daily. You might want to do that daily. Taking these things into consideration can improve your it could give you more trade opportunities, improve the probability of them being successful, and also improve the probability of those giving you the kind of returns that you want. So economic data, there are correlations between things like interest rates, jobs, Federal Reserve holdings, yield curves on fixed income securities, and how the market moves. You don't have to know about these things. You don't have to pay any attention to them, but it's good practice to be somewhat educated on these because with experience in the market, having an idea of what these bigger picture things are and how they're working to drive price can give you a more educated understanding of what's actually going on. It's just good practice to be aware of them. They don't need to guide your day-to-day decision making. So another thing that's really important to be aware of is what sectors are hot, um, what sectors receiving the most upwards momentum. Obviously, recently AI tech has been big, but also there's been a lot of movement in medicine and defense. Medicine for these weight loss drugs that are coming out, Ozempic, get the shot in your butt sort of thing. Eli Lilly makes them. That stock's been going up a lot. Also, defense stocks outperformed since the war in Ukraine. Meanwhile, educator energy's kind of like stagnated, right? Um, it's important to be a participant in whatever sector's doing the best. That's the only way that you meet or outperform the S&P 500 is to be a participant in the best sectors in the S&P 500, since like the S&P 500 kind of encompasses a little bit of everything. Um, another example before we move on is cannabis. Like when cannabis legalization was really taking off, especially with Canadian companies. It was happening around the same time in Canada and the U.S. and those companies were really, they were going public and they were really taking off. Just some things to consider. Now, within hot sectors, you're going to have market leaders. And even outside of hot sectors, there will still be market leaders like Lululemon and Costco in retail and grocery. Well, I don't know what grocery falls under. Consumer non-durables, maybe. I think, yeah. Um, those two companies have been doing great. They're leaders in their market. They're just the best, and they've still been taking off despite those two sectors not actually doing that great. In the past 2 years, NVIDIA has been a market leader in the tech slash AI space. And, I'm not saying you need to go in all in on NVIDIA during that time, but you need to keep track of what NVIDIA is doing because it obviously had a huge impact in the growth of QQQ and just the market in general. So it's just good to know what's going on with such an influential player. Um, like right now, I think NVIDIA valuations are kind of crazy. Like they're really high and everything, but I'm not going to fight the markets. I'm going to take what the markets are telling me and I'm going to use that to guide my decision making. I might not even touch NVIDIA, but there are other adjacent equity opportunities that, um, if NVIDIA is going strong, are available. So yeah, using NVIDIA to gauge the markets. So that's three things already. The fourth and last thing are ETFs. SPY, QQQ. I always want to know what their market structure is. I rarely trade these. I will hold them in obvious bear markets. I will short them in obvious I will hold them in obvious bull markets, short them in obvious bear markets. But I'm not really trading them. I will use their market structure. If we have bullish market structure in SPY, I'm going to be looking for longs generally. If we have bearish market structure in SPY, or especially QQQ, I'm looking for shorts. Like, why would you short NVIDIA when QQQ, okay, NVIDIA is consolidating a bit, but QQQ is still making all-time highs? Maybe you could do a little bit of a scalp to the downside on NVIDIA as it's, taking a bit of a pause, but I'm not trying to swing trade that short. Now, if NVIDIA is a market leader, it shows signs of topping out, and QQQ starts rolling over, and we get confirmation of bearish market structure on both, then off to the races. Short NVIDIA all you want, but you don't do that until you get confirmation. And for me, confirmation, these ETFs, they are like the ultimate market sentiment indicator, and I wanna follow what they're doing. So simply by tracking higher highs and higher lows, I can be aware if the market is overall bullish. If we're getting lower highs and lower lows, the market's overall bearish. Even if it's just for a short period, still something I take into consideration. Especially, even the strongest bull markets have periods of consolidation or retracement. Capitalizing on those is how you beat the S&P 500. There's no other way, really. It's pretty easy to track the trend of SPY and QQQ. So that's a basic overview of macro factors to consider. There's four, but we had economic data, hot sectors. Under the hot sectors, we have market leaders, and then we have SPY and QQQ to just gauge the overall direction of the market, the sentiment of the market. Yeah. I mean, it's simple stuff, but things are good simple. If you want any more detail on any of these subjects, comment and subscribe, and I'll be here for you. We can dive deeper on it. I could talk. I got like 4 pages and they're like wide spacing. I could write a book on any single one of these. Not because I know so much. I mean, I'd have to research some of that shit, but generally, you can get as detailed as you want. But if you keep things simple and just kind of pound through it, it gives you more mental energy to focus on, like actually trading your system and all of that stuff. So, thanks.